I don't often look for weekly signals, but this one seems pretty significant and could be explosive when it finally breaks. Stay around and I'll show it to you. Hi, this is Tim from TradingStrategyGuides.com. Today's trade pick is a weekly trading range on the US dollar Japanese yen currency pair. We're going to have a look at that shortly, but first we've got a bunch of charts to look at today. And later on, another brand new maxim. You guys are just hitting the mother load, aren't you? New week, new month. Happy Monday, happy August. Remember to click the subscribe button and hit the bell so you don't miss any of these great trade setups. Let's take a look at the active trades. Well, silver's triangle consolidation could be breaking right now. This is a pretty bullish close on Friday's candle. My stop is still here at 21.4846. But a good solid close above 25 or so would make me want to start trailing the stops again. We've got half off our Euro New Zealand dollar, and we're now waiting for this parabolic SAR to get above the break even so we can start trailing stops on this one. Palladium pulled back, but it looks like this pullback is pausing just a little bit right here. Hopefully it's going to turn back to the upside at this point. If it forms a consolidation here, I will probably not start trailing these stops until the consolidation breaks. AMD still hanging up here around the 77 level. If you haven't taken some profit up here, I suggest you take a little bit if you can. In any case, I'm holding and waiting for the PSAR to get above the break-even stop to start trailing stops on this. Looks like the Euro Canadian has stalled right here at this 160 level. Hopefully it'll continue. Hopefully it'll break through and continue. I'm waiting for the parabolic SAR, as usual, to get up above the break-even to start trailing stops on this. The Euro Japanese yen set up from a week ago Friday, triggered on this Friday, a buy, and I'm in it at 124.71. My stop of 123.35. First target 125.61. And the Euro British Pound set up from last week, triggered to sell on Friday also. Friday was a good day, wasn't it? I'm in at 9,000-ish with my stop at 90.96, my first target of 89.36. And lastly, take a look at Chewy from Friday's setup, attacking the top of the range right here. Didn't quite break through, but it's looking pretty dang strong with this hard close right at the top of the candle. So be sure to watch it this coming week. And that's it for today's active trades. Let's take a look at the pick. I haven't looked at a weekly signal in a long time, but I was messing around with the charts this weekend, and I saw this serious range on the weekly USD yen chart. So I thought I'd share it with you guys. Since it's a weekly setup, we'll only look for a close outside the range on Fridays. But when it comes to executing the trade, we'll use the daily ATR for a stop and target. Otherwise, we'll have to go in with tiny size and wait forever for the trade to play out. Anyone who's followed this channel long enough will recall a few times that we used weekly targets. It's just annoying. So I promised I would never do that again. So this is me following through on that promise. Just to be sure everyone understands, a trading range is a consolidation with a strong support level like this one at 104.50 and a strong resistance level like this one at 112.50. Price just sort of bangs back and forth between these levels until it eventually explodes out of the range in one direction or the other. I'll take a break of the trading range in either direction. And as a nice confirmation of the consolidation, we have a decline in volume and volatility right down here. Volatility is the amount of daily movement of the price, or in this case, weekly movement of the price, and I measure it with the average true range, or ATR, which shows the average length of the last 14 candles. Now I want to qualify something here. We don't look for perfection in these patterns. Perfection is not necessary. As you can see, there was this huge move right here. I probably could go back in the news and find out what caused this, but it doesn't really matter. Huge volume for a few days, and the volatility spiked way up, but as you can see, it was moving down. It did that little spiky thing, and then it went back to moving down. Okay, so that, in my opinion, is a continued decline, and I call this an anomaly. So let's take a look at the trade plan. We're going to buy a weekly candle close above the range or above 112.50, or we will sell a weekly candle close below the range or below 104.50. On the breaking candle, to enter a full-size position, we want to see the weekly volume bar exceed the volume average right here. If it doesn't quite reach the average but does reach 75% of the average, I'll take a half-size position to reduce risk. You can calculate the average volume by taking this volume number, dividing it by this volume average, and you should get at least 0.75. If you don't get at least 0.75, I suggest you stand aside on the trade. The stop loss will be 1.5 times the daily ATR, and the first target will be 1 times the daily ATR. So what does that mean? Well, let's say this thing breaks down here on a Friday, and just ahead of the close, you put in your sell order. Then you want to switch to the daily chart and take a look at the daily ATR. Now, the reason we do that is because we want to keep our stops and our targets small enough so that we can use a larger trade size. After you get the daily ATR, you want to multiply that by 1.5. I'm going to switch back to the weekly chart again here. Multiply that number by 1.5, measure that distance above the entry, and that'll be your stop loss. Measure 1 ATR below the entry, and that'll be your first target in the case of a sell, and of course the opposite in the case of a buy. If after entering the trade you get a close back inside the range, a weekly close back inside the range, so the weekly candle or Friday's candle has to close back inside the range for you to unload this trade or get out of it. Okay, so we're using weekly rules for the triggering, but we're using daily rules for the target and the stop loss. And this is a common practice. A lot of times longer term signals are more significant and more explosive, but you don't want to use the huge stops and huge targets that the longer term signals represent. So you use shorter term stops and targets with the longer term signals. Of course, when the price hits our first target, we'll close half the position for profit, set the stop loss to break even on the remainder. We'll then follow the stops as price moves in our direction until the market takes us out. Now typically I do this with 2 positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade, And that's today's setup on the US dollar Japanese yen currency pair. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And speaking of understanding your own mind, that's my intent for the trading maxims. The maxims help me control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, a brand new trading maxim of the day. Trading maxim number 81. You can't beat the person who never gives up. And this comes from the great Babe Ruth. Most of you probably know that Babe Ruth is arguably the greatest player ever to play the game of baseball. Now, I'm not a particular fan of baseball. I don't mind watching it once in a while, but I don't follow it too closely. So I'm just kind of going by what I've heard about Babe Ruth. But I have heard quotes from him before, and I do know that the man is full of wisdom, so be sure to listen up. I know this is a recurring theme in my maxims, the concept of never giving up. It applies to all areas of your life. The person who never gives up can never be beaten. Remember our US dollar Japanese yen trade plan for today. We're going to buy a weekly candle close above the trading range or above 112.50, or sell a weekly candle close below the trading range or below 104.50. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the daily ATR, and your first target is 1 times the daily ATR. And remember to click the link below to the trade management video for more details. Don't forget to sign up for my free Trading Picks email list to be sure you don't miss any of these great picks. I send out about 2 or 3 trading picks a week from all different markets, and you'll get to see them first. Best thing about it is they're free. I'll put the link below this video. And be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video or both. And remember, the only stupid question is the unasked one. Be sure not to miss the next installment of the Trading Education series on Wednesday, when I'll continue discussing the TradingView trading platform. As always, thanks for watching, thanks for subscribing. Don't forget to hit the thumbs up below. Have a great week, and I'll see you Wednesday.